I apologize for the little bit of delay today, y'all. Y'all know I'm not a delayed person at all. For the most part, no more than like 5 minutes. And that's the military in me. Okay. Also, I was raised by a military mom, so we just don't play that. Just don't play being late. But today I got kind of caught up with my daughter, as all moms can understand. So that is why we had a little bit of delay today. I was trying to give her a little more TLC time and things like that. So that is what happened today. So I do apologize because you guys know me. But we're here, right? We're here. So we're good. You know I'm gonna be on unless I send a message that's telling y'all I cancel. I'm gonna be here. All right. I will always let you guys know if I'm gonna cancel a session. And I don't plan to cancel a session anytime soon. So we're good there. Um, so welcome everyone. Happy Sunday, amazing Sunday. It is Sunday, September 3rd. We are in September. So that means that because we're at the beginning of a month, we're going to be doing a lot of top-down analysis today and going down from there. All right. So every ticker that we look at today, we're going to do a top-down analysis, starting from the monthly view and kind of giving us an overall look at what the monthly chart has to offer us. And then we'll scale down from there, obviously, to the 2 hour to look at our overall moves and go from there. I'm sure most of my experienced traders in the crib today are going to maybe have already done their homework. But if not, this is what Sunday school is for. Sunday school is for homework. I went to church as a kid, so that's why it's called Sunday school. Um, so that's what it is. So first up, and always first up, we're going to be looking at the futures. I can pull up a few fundamentals just to ensure that we are good with the fundamentals, and we'll go from there. So let's take a look at Benzinga and CNBC just to see what type of news came in over the weekend that may be interesting to put our eyes on as we enter the week. And then we will go from there. So I am a little off today, but that's okay. It happens to the best of us. But we get right back on track because that's how we know how to do that as successful traders up in this crib. All right. So first up, Forex Factory. So we can take a look at Forex Factory for the week. So we can see exactly what is coming for the week. So I kind of pull over these windows for us. All right. So Forex Factory, what do we have? Monday is obviously a holiday. As for those of you who are here with us in the United States, it is Labor Day weekend. All right. We're doing this call because of Labor Day. I wanted to make sure we get in some charting in before we hit the live markets on Tuesday. And then for those of you who trade the futures and the Forex, obviously you'll be able to make money on the holidays because don't nobody care about Labor Day but the United States. So that means that all of your other markets are going to be live and in action. So I definitely plan to trade tomorrow while the stock market takes a break. But Forex market should be going just as strong. So moving forward from there, we have Tuesday through the end of the week. And only this week we have very few red folders. We have Wednesday at 10 a.m. Eastern Standard Time. And here in the United States, we have the ISM PMI services that are going to drop once the market opens. And then on Thursday, we have some pre-market red folder of unemployment claims, which is kind of, we always have the unemployment claims. So nothing too exciting there. This week is a very blah week as far as red folders. According to some other traders, we should only be written, and even me, but sometimes I make exceptions to the rules because I'm the rebel like that. We're going to be trading primarily the red folders, right? Primarily the red folder days. So Wednesday and Thursday are probably going to be our most liquid days if we speak to that, the liquidity. But of course, the market can definitely do a move on Tuesday, can definitely do a move on Friday that could be pretty profitable as long as you know what you're looking at, as far as like fair value gaps and just and Globex gaps and things like that. So that is Forex Factory. Very, very calm for this week moving into September. So we don't have much there. Moving over to Benzinga. Benzinga is showing, just a little bit of soft arms, reveals IPO ambitions with close to 54. Sorry, I'm getting like my daughter here reading so backwards. 54 billion valuation. So, again, I always let you guys know that you can go into this article and view the headline and see what else may be cooking there. You just click on the link and you will be into the article and kind of getting an idea of what else they're talking about here. Rivian is definitely a company that was brought up in the crib once before, so it's nice to see that stock is the highlight of this particular report. So we can look at that today as well. Let me write it down so I won't forget. And of course, as always, I rely on you, crib family, to help remind me what we need to look at. But Rivian, we can look at if it is potentially going to make some type of move by being in the Benzinga article today. And then last but not least, I guess I don't have CBNC up here, but we'll just boom right there. I have certain things saved. All right, so here is Benzinga. According to Friday, Dow closes more than 100 points higher to kick off September, notches best week since July. So I ain't gonna lie, we did have a good run up last week. I think most of us were profitable, very, very profitable last week. So I'm proud of you all in the crib for making your profits last week. We always want to, you know, congratulate ourselves and stay in that positive mindset, as we know that we can do this because trading is a journey. But overall, scrolling down from there on CNBC, we have U.S. Commerce Secretary says didn't pull any purchases during recent visit to China. So again, weekend news is kind of like, it can be everywhere. I ain't gonna lie. It can you can have things that pop up in the weekend news that can be, within different sectors, within different industries and things like that. So you just kind of take it as a grain of salt unless something really big is coming up, and then wait for the weekly news to kind of figure out what the overall market is doing. So, weekend news, I kind of just look at it. I kind of just say, okay, this is what happened. Cool, but I get my guarantee trades off the chart no matter what. I'm very much a technical analysis trader, so I look at the chart for those liquid moves that are identified through fair value gaps and order blocks. All right. So this to me doesn't mean too much of nothing. We'll see how the China market starts off early in the morning and things like that for us here in the United States. And we'll kind of move from there. We'll see what kind of changes it makes, and we'll take a look at our futures banner once 6 o'clock comes around and see what that, how the futures is affected by the Chinese and the European market, right? So we'll just take it one step at a time. All right, cool. So from there, we are going to go into, sorry, y'all, just looking at a few things on Zoom here. All right, so now we are going to move over to the chart because this is Sunday school charting, and that is what we do. We focus on the charts. So first and foremost is always, always, always the futures, because a lot of us we look at the futures, which is the S&P 500 mini, and we figure out what the overall market is going to do based off what the futures are going to do. We do take a glance at the Dow and the NASDAQ futures to kind of get a very, composition type of view of what the market is going to do. But we always start with the S&P 500 and then kind of go from there. So looking at the monthly, again, like I said, it is a new month. So we want to always start the month off with a top-down analysis starting from the monthly view. Mid-month, when you join the Sunday school calls, we will most likely be on a weekly top-down analysis and not the monthly, but we always want to start with the monthly as a top-down analysis from the monthly view. All right. And that just gives us an overall like bird's eye view of what the market may be doing. So looking at the futures, we have this nice, of course, I got a clean chart here because it's a new month. So we're looking at this nice big U cradle V, whatever you want to call it. It's like a U and a V and a cradle all in one. However you want to call it, I do not care. That's trader's choice. But you can see that price had dropped down, kind of consolidated here in this bottom area, and then is now making its way up back to its previous all-time high, which was back in December of 2021, in January of 2022. So now from here, we need price to break this monthly level in order to continue on its uptrend, right? We want a nice bullish economy growth looking market. That's what we all want. And so we're going to take our time and see if we can actually break this level. So for some of you who may be interested, we can mark this top monthly view. I do recommend putting in different types of colors or lines or whatever to be able to differentiate between your monthly and your weekly and your daily and your 2 hour, all of the above, as you go into charting here. But we can mark off the top and we can see that the monthly chart, and I'm actually going to add a label to it. So I'm going to make it a thick 2-point line, and I'm going to mark resistance with a little bit of text here to say that this is my monthly line, okay? So like monthly top would be the base. And I always chart based on the candlestick body and not the wicks. Just because the wicks need time to also break, you can mark them, of course, it's trader choice. But the body of the candle is what I look at the most. So that's the monthly at 4771.75 is where we're looking to come back up to test that level. I do expect that when we test that level, price will most likely consolidate before breaking through. So we will see how it goes. But for now, we do have some room to trade. Okay, we have some room for price to move up to that level of resistance, and we can trade up to that level of resistance before we kind of going to sit on our hands and see if price is going to break through that level. All right. So coming down to the weekly on the futures, we see that that monthly line is lining up right with the weekly high as well. So we don't need to add another line, which is great. And we do, again, have some room to run up. Of course, we just broke this previous peak high head and shoulders. This is a head and shoulders pattern. So this is the head, it's shoulder one and shoulder two. So we just broke past the second shoulder, and we want to continue up into the head, right? So of course, after breaking through the shoulder, we're going to meet some level of resistance. We're going to retrace downward and to collect a few buyers to give us the strength to move up to the monthly level or monthly / weekly, however you want to call it, since the line is the same, head area of the chart here. So of course, each take it one level of it at a time as we come back and recover and move up to price. Based on this weekly pattern, right? Based on the weekly pattern, I don't really see a lot of potential for it to drop at the moment. Again, everything is on probabilities. So if we clear this most recent weekly high, okay, so I'm coming here and I will do a thinner line. I'm still gonna do a line, marking the tweezer top that's up here, because that's a reversal pattern. So of course, tweezer top came in, price retraced down, but because of this order block sitting here on the weekly level, you know what? I hate when things get resetted and then like, where's my here it is. It's moved. All right, there we go. Boom. My square. So here's my order block here that caught price and held price at a level of weekly support. So I'm going to mark the weekly support, this tweezer bottom here. I'm going to mark that. All right, and support, because that's also alignment with my overall breakout candle, right? And my order block chop and then initial breakout. So we're gonna just kind of look at that as the order block for a weekly perspective, and price hit that level of support and is now coming back up to meet the level of resistance. So we need price to break 4607.25 in order for price to continue upward to the 47.71. And of course, this little pattern over here, these little sticky doji candles right here, spinning tops is what I will call this one, is going to be another level of resistance, right? It's going to be another level of resistance. So 46.71, we could potentially, and I'm emphasizing the potentially because sometimes price, depending on the news that is aligned with it, it will just break through. So we're going to potentially believe that price is going to break at 46.71.50. I see you, Tandra. It does look like it's forming one of those. See how I love it. Bring on the candlestick magic, ladies. Bring on the candlestick magic. Okay.
That monthly chart really looks like a cup. It really looks like a cup. So yeah, that looks like a cup for sure.
So yeah. I love how you have transitioned to cup versus Catty-Wop W, right?
Well, it hadn't made the Catty-Wop W just yet, but I can see the cup. That's the first part of the W. Or is it going to make an M?
Up here, you mean?
Could it hit resistance up at the top, go up to that top monthly resistance and come back down again, make an M?
Of course it can. It can make, look, I see what you're saying. I see it now. I see the whole pattern. So with the fact that we know that, right, news has potentially kind of hinted to another recession, right? That's what you alluding to?
Yep.
It could be a larger monthly M, which I would hate to see a monthly M, honestly, guys. Yeah. I mean, I guess I wouldn't hate it too much. I know how to write it down, but it's just like, that's what you're going to do. An M to this magnitude, that means market's going to drop like crazy, Tandra.
Yeah. Well, let's hope it even if it comes back down, maybe it's forming a W, but not.
Even what COVID was, what, early 2020?
Yeah, February 2020.
Okay, so this is March 2020. Yeah. So it just made a dip, right? It didn't do a complete like M. I don't know. Yeah. Have you ever seen an M on the monthly? Golly. I'm scared. If it does a monthly M, I ain't gonna lie. Like for all the investors, I'm a day trader, so it don't matter to me, right? But for the investors, that's scary.
Yeah. It's just, like I said, it's just something to keep in mind.
I see what she's talking about. I could totally see it. So what Tandra's kind of potentially predicting, and that emphasis on the potential, is that we're going up here, and double tops are always key reversals. And the larger the time frame, the more likely it is that it's going to happen. So she's saying that we could hit 44, where's this line at? 47.41, right? Hit that as resistance, another level of resistance, and make a double top pattern, okay? And then come down. And like that's a recession.
Yeah. So that's one. Or if it's doing a cup and a handle, it can retrace just a little bit and then go back up. It can go up and make that double top, come down, retract just a little bit, and then go back up again. So maybe not go all the way down that far, but maybe just a little bit to form that handle, and then continue.
You would need a retracement to least back down to the order block.
Oh, to the order block.
It's going to be to the order block, though.
Oh, I see what you're saying. So if it starts retracing, it's probably going to
Because
drop.
if it's going to do a cup and handle, it's still got to come down here.
Come down to probably there. Okay. Yeah.
I see it. So
at least to there, yes. So that's so. So now, if it does the cup and handle, that's not bad because then it'll
it's
just
not.
back up. So,
the cup and handle is not bad from the monthly perspective, but if it does the M, I'm scared.
Right.
I ain't gonna lie. Like we gonna be, come on, Mama Bear Trader. Like I'm gonna
Well,
just short.
as resilient as this market has been, I'm probably more betting on a cup and handle than I am M because it's been pretty strong. Well, then again, let me take it back.
Just put the alert. Just put the alert.
I know. Yeah, let's put the alert because
71.
But remember, this retraction right here was all about those stupid the credit rating and thing. Was it the credit rating?
Yes.
When that came in and blew up my trades.
Every level aligns with some type of news.
It does. It's not by coincidence. It's like, okay, there's something is happening, how this stuff lines up with the news like that.
Every time, like clockwork.
Yeah. So aren't we due for another credit rate? Wasn't there like one more that we're supposed to hear back from? Was that S&P? Who was that? Standard & Poor's? Was that the last one?
We had Moody. We had Moody come in. We had Moody and we had Fitch, right?
Okay. Yes. So S&P hasn't said anything yet. Are they going to wait till we get up there and then say something?
Probably.
Messing up our trades.
We know how to play trying to be great. I know you don't like playing bearish moves.
I hate playing bearish moves, so let's just go ahead and put that out there. I hate them.
And and that's fine. So you're either gonna but here's the thing, you hate it, but you know how to play it.
Yes, I do.
So, just debit spread your ass off.
Basically. Now, I do kind of need a little bit of retracements for this one debit spread, to put debit spread that I'm in for SPY. But again, I bought it for real cheap. So, I mean, I can always get out if it continues to climb. But
so when it comes to that, did you go further out? Did you go out of it? So back up. I have two questions.
Okay.
Because we knew the direction was bullish. Did you go in the money debit spread on the bullish and then out of the money debit spread on the bearish?
We did. I did an at the money bearish. It was going down. But then I want to say there was a time that I probably should have gotten out, but I was distracted by something. So so when I went back and looked, there was a time I should have been getting out, but I was not at my computer or had not said anything. I was like, oh, look at it later. And it was too, So anyway, but I have the time if it does retrace it. But once again, it was a at the money bearish move is what I was doing. Okay. But again, but the contract was less than $100, so we're not. I'm not stressing about
it. And this is just my personal bias. Okay, we're all on our individual journey here. But I would have did out of the money bearish if you had a stronger conviction of bullish. Why go out of the money bearish?
So this was when I was first beginning to kind of play with these debits. This was during my playing moment. Yeah. So it was. I now know that I want to get them out of the money and let price come to me. Right. But like I said, this was one of those beginning ones that I had gotten. I got to play with it, which is why I spent less than $100 for it, just to see what it do. So that's all I was doing, just testing out, seeing what it does. Again, I think I bought it for $77, so it's not that I'm not too worried about it. Yeah, I'm not too worried about it. So, so that was at the initial beginning of just playing with them. So I'm not worried about it so much. But the newer ones that I'm getting in, I'm doing out of the money and letting price come to me.
Okay. Got it. All right. So that's one prediction, right? Tandra is seeing a potential M could form on the monthly. That's not anybody see anything else or anybody thinking anything else on this monthly top-down analysis, so I can change this to green. Because so overall, no matter what, even if it does the M, so the M would mean it will come back up to meet the all-time high of like the 47.71, right? It's going to bounce off of that, and then it's going to come down and at least meet here at 41.71. And if it breaks the 41.71, then we're most likely in a bearish move. Bearish meaning down move. So, and then if it further breaks, what we really need to break for a bearish move is this 30. Girl, I do not want to see no 35s anymore for like, just give us a bullish run. Like, can we just get a bullish market? That's just overall, bias. But if it breaks a 35.97, breaking this monthly support here, and we're definitely in more of a bearish move predicament, potential recession, and maybe that will finally get the elite, meaning like the Federal Reserve chair Jerome Powell and a few other, leaders like that to say, okay, we're finally in a recession, right? That's kind of how I'm interpreting it, and an emphasis on the I'm, because everybody's going to have their different interpretation of this. So that's one particular move, okay, from the monthly that we can think that price could come down to. Now, when we come to the weekly time frame, all right, and based on all my levels that I put, this is my weekly line here at the 43.82, and that's what price just bounced off of in the last few weeks, and so it's coming back up. So what we could also have is another M, right, meeting back up at this level. So I only use trend lines to draw. I don't really use trend lines as they're supposed to be used, because that's just the Randy in me, right? So for y'all who know me, I don't follow the rules too much. That's just me. So we can meet back up to 46.07, bounce there and do an M. And if we break the 43.82, sorry y'all, I'm just all over the place today. 43.82 level, then we can break down and we can see another potential. And then if it breaks here, it's going to the next order block. Facts, like just straight up facts. And I'm also, I ain't gonna lie, a part of me is a little sitting on my hands this week because we got a new contract coming up this week for the futures. So it's September, and y'all know the futures contract changes quarterly, right? So right. Here it is, and that's not it. It shows up on the daily, I think.
So Randy, I have a question. It never did go back and take care. It just went back and bounced off of where it jumped from the new, when it went from the from the previous quarter contract to the next one.
Well, I mean, did it bounce entirely?
It just bounced off of it. Yeah, it bounced off. It just bounced off of it and came right back up.
So this is what she's talking about. This is the area, this gap right here, that was June. So the contract changed in June. And you know that by TradingView, because see this little purple button here? Shout out to Jennifer who made it in the house. Woo! Welcome, Jennifer. Yay! So this is where your contract changes for the futures. All right. So the next one is right here. And if you click it, it says September 8th. Right. So that's just this upcoming Friday. So I'm expecting it to do some type of gap move. I ain't gonna lie. It's either gonna be up or down. I would like it to be up, but we're gonna trade whatever it does. And so since it's coming up, I almost want to sit on my hands. And I think that's another reason why that the Forex Factory, we don't have a lot of red folders, because I think it knows that too. I really do. It's just my sentiment. So it bounced off of it. You're right. It pretty much bounced off of the previous contract and came back up. And if you look, this is my projection of an M, but it doesn't have to do an M at all. It really doesn't. I'm gonna take these lines out. We have a daily W. So now I'm on the daily. All right. So we did our weekly, we did our monthly, and kind of set some major support and resistance. And I use different thickness of lines. So my thickest lines are the monthly. and my thinner lines are the weekly. And then now I'm gonna come in here and do dash lines for daily and then dotted lines for my 2-hour setup. So we did a nice little double bottom. It's a little wonky W, but I don't know if anybody else has something different they want to see it as. I see it as a W. Sandra, what you think?
W? Yeah, I see the double bottom. I see it. Yeah, I see a W. I see the double bottom there. Yeah.
And it lines up with like the weekly line that I put right here at the order block, you know? So it came in, tested this order block, and then it bounced right up off of that. So, daily. So we have a daily W. Now, daily W's can fail, like I said Friday, but they tend to not fail as often. I was just kind of not as often. I'm not saying they don't, because they're just everything is probabilities, but I would expect it to come up and truly, this we have another order block up here, and order blocks are magnets on the chart. So if we clear this order block, we already tested it, we're kind of trading through it, and then I believe we should come on to the next one. I don't have my fair value gap indicator on. Give me a second. I save a lot of indicators. Here we go. All right. So there's a fair value gap. So it tested right at the fair value gap. It didn't, the only wick that's left in the fair value gap is this one previously. All right, let me change up the lines. Okay, dash. So, and I can make it red for resistance and green for support. But overall, like we tested the fair value gap, we literally just kissed it with this wick on Friday. And then the previous wick that's left in it is from August 4th. Now, for those who've been trading with me for a while, know that I have this theory, and it really plays out better on the 2-hour time frame. I'm not saying it doesn't play out on the daily. It just takes longer to happen on the daily, right? But if, for those of you who have kids, right, you drop your kids off to daycare and you can't leave kids at daycare, you got to come back and get them kids, okay? So if we have a wick left in the fair value gap daycare, then we got to come back and get the kids at some point. So it's more, it happens a little quicker on the 2-hour time frame or below, but on the daily time frame, it could take days to come back and come get your kids. Now, is that great for reality and how you should treat your own children? No. You're just gonna leave them babies there? No, but that's the theory, and I think everybody can relate to that. So, like, if you left kids in the daycare, you got to come back and get them kids. So that's kind of what I'm expecting, especially since this wick that has been left in the fair value gap aligns with a daily gap. So always make my gaps purple. All right. It aligns with the daily gap, where price gap between two different candles, a physical gap. So I would expect price to be drawn up to at least this gap at 45.78 from the futures perspective. So I'm expecting price to continue to rise, at least to here, and then turn around. Even if it doesn't completely match the 46.07, which is a weekly line. Was it weekly or monthly? Yeah, weekly. So let me fix that just a little bit. Okay, 46.09. Let me line it up right exactly. So I definitely expect it to clear the gap, wick up to 46.08, and then come back down. Now, how far the retracement is going to be, that's where we would need to use Fibonacci retracement tool to figure that out to the T. But I'm expecting this to come up some. I'm still expecting this to come up some because it's doing exactly what a W is supposed to do. Forms a W, breaks a neckline, and then chops for a minute and then continues up. There's like a flag pattern. So that's what I see. All right. And if we can, take advantage of some of the movement in between the chop, like Tanza did beautifully on Friday. She took the Globex gap like beautifully. She knew price was going to kind of run up a bit. just take it down. That's what we do. We don't obviously collect as much money as this long candle, but it's still profitable if you know how to manage it correctly. So that was nice on Tans. I was teaching Friday, so I couldn't jump in it with her because she know I would have been right there with her on that move. And I did do a short move on it, and it did come down and hit because remember I was in the Telegram chat for those of you who may have known. So here's my 2 hour. I was looking at this 2 hour, like, see, it's kind of really sideways. I was looking at this like it's probably gonna be short lived, and I wasn't wrong because it really didn't break down just yet. But I was expecting it to at least come to 45.09. And it did come to the 45.09 and it took me out and it made a $325 profit. So smaller profits because it's a chop trade, but it's profitable, right? $325 takes care of how many of our bills. Okay, let's just be real here. So like that, it did the move, but I knew it was gonna struggle to hit this V area or this morning star area right here where price dipped down, made it like a doji type of, it made it more like an inverted hammer, and then rose back up. So this is a evening star here. I mean morning star, sorry. Morning star here. Morning star is going up, evening star is going down because the sun comes up morning, okay, and the evening the sun sets. Okay, that's the psychology behind that. So now it is looking like the highs are getting lower from my 2 hour perspective. So now we're on a 2 hour. We can chart our daily setup that we may have. I'm not looking for the market to move too much because we are approaching the holiday. So I'm going to go on and mark off this tweezer bottom here as support. Okay. 45.09. It when I look, your girl be on it, y'all. Didn't I say 45.09? And the reason why I got 45.09 before the chart did this, there was a daily fair value gap right here. This one is still there because it hasn't been filled with a candle body, but the wick of this candle and the wick of the previous candle, it was lining up like right, and I basically set price like right at the bottom of the fair value gap, lining it up with this wick, and I set my take profit there. So clearly price came down. It took a day because I got into it on Thursday and it didn't fill it till Friday, but I held the conviction even though, and I just didn't look at my P&L when it was all the way up here. I just didn't look. Okay. And I would have loved to take it like Tanza took it, which Tanza got in up here and then rode it all the way down. Because I wasn't sure and I could see the potential moves to the downside as well to come down here. I took it more in between this candle. So I had to hold it longer, right? Versus Tanza came in with the come through and she got in up here and she just rode it all the way down, which was just freaking beautiful.
What time frame is Tanza using?
Oh, ask Tanza. She in here.
Is she in here? Oh, okay. Hey, where you at, girl? What time frame are you using to know to jump in? What did 2 hour?
2 hour.
You saw that on the 2 hour?
If I was looking at the chart, I could see it too because like price wicked up here, and so once she noticed that price was coming up here, she knew the level because I had the same level marked, the 40, the 45, 47, because it was a daily fair value gap kiss, and price on the daily fair value gap is always going to kiss it first and then turn back around. And I'm pretty sure she followed that same, but she also does watch price opening. So take that out.
Watch it opening for that candle, opening price for that candle, opening price for the day. What are we
opening
talking
price
about?
For SPX.
Okay, I'll come off of
mute. Okay, all right. Yeah, because you got school me, girl. I'm in the back.
Okay, I'll come off of mute. So okay, so what I'm doing is I'm looking at wherever we are prior to opening. So I don't care where we are. Let's say today we gap up 20 points at the open. I'm going to automatically take a trade there. If we gap up that much, because to me, we're going to have to come back down at some point to close that gap. So instead of waiting for the regular market to open for the SPX gap, I'm already in the gap before the gap happens for everyone else in terms of
so wait.
who.
When you say opening, you mean 9:30 opening? What time frame?
Like 8 a.m. because she trades the gaps using the futures.
Right. I'm trading the gaps using the future. So I'm getting in. That's why I'm able to get in so high. So I was able to get in at 45.40 because I'm trading before the regular market opens.
Oh, I see. So as Brandy just hovered, so I see it's 8 o'clock. Okay.
Okay. So it's whatever time. So even if we gap up right now, in a minute, if we gap up at 3 p.m. my time, I'm going to get in at 3 p.m. my time.
What gives you the conviction that it's going to come back? Does it, because it tends to do that?
It's a level of resistance, but 80% of the time, it tends to come back and close its gaps. Now, of course, there are several times that it hasn't, but 80% of the time, ES and SPX come back and close their gaps.
Yeah.
But of course, there are some that are still sitting there from last year.
Right.
And the year before that. So it's not 100%, but I'm feeling like, well, it's like, for instance, so my the reason I would feel convicted for instance, today, if it were to happen, is because we've gone up so many days in a row and we haven't taken a break. So, and we keep filling those gaps when we do pop up. Like all this week, we've been filling all of the Globex gaps.
Yeah.
But more so because more of my conviction right now is because we've been going up several days in a row without pulling back at all. So it just lets me know that the probability of us filling the gap is higher than not, if that makes sense to you. But it also comes with experience. So I've been doing this particular strategy probably for at least 2.5 years straight. So it comes with that too. So my just saying I have a conviction doesn't necessarily equate to your having that same conviction. It's just the experience that I have with doing it helps me to be more confident in staying in that trade or getting into that trade.
Okay.
Does any of that make sense or even kind of help you?
No, that makes sense. But like I said, I guess with mine, it's like, I'm never always convinced that it's going to come back down. But I see what you're saying. You're getting in.
To come back down to some extent, Tondra.
At some point. But again, I'm with Tanza. I've seen it where it just kept going day after day after day, So I've seen some.
Right. Like we can go look at the daily and price just never came back like that. And so Tanza, when, for instance, when price, like the contract changed and price just gapped up and stayed up, do you close out of the puts immediately? Like what gives you your conviction to say, okay, I'm wrong, I need to close that position and take that?
So it really depends. Most of the time I have to say I don't tend to close them out, because let's say I have 5 contracts on the put side and we don't go back and revisit that gap for a week. Well, if I see that we're not doing that and there's another gap maybe that we need to fill above, like we're kind of in that situation right now. We are very close to the upper gap. I think you were discussing it. I'm a little bit busy. That's why I wasn't on a few minutes ago in terms of talking. But there's a gap up there that starts on SPX at 45.50 to 45.78, which equates to around the same price since the contracts are now going to be around the same number. So about 45.55 on ES to about 45.85 on ES. We have a gap up there. So we also have a gap though down at 45.14 or 44.14. So 100 points away down below that we never filled. That happened last week. But because we're up at closer to this upper gap, if I see that we're nowhere near that lower gap right now at 44.15, what I would do instead of getting out of my puts is basically double up on the calls. So that doesn't work for everyone because it means you're going to probably lose all of your premium on the other side. But because I'm doubling up with the contracts on the opposite side, I never even realized that there was a loss on that side. So you can do one or the other, either get out of them and then go the other direction, or go the other direction by doubling up, and then you don't realize any losses on the opposite side.
Facts.
Okay.
Because when price is really going in the direction of in a certain direction, if you have the opposite direction, you really do. Like I've seen it multiple times, and Tanza is just another like, conviction to that, is like you don't, it just makes up so much of your profit that it's like you didn't even lose on the other side, like at all. Like at all. You're just in straight profit. It like cancels each other out and then some.
Right.
You just gotta know how to play it.
Because it kind of doesn't go in line with probably what you've learned, which is get out at, if it's above your 20. I can't remember what the rule is that you were taught in the other course, but about the 20% below I can't even remember because I don't do it. But but it doesn't, but it's gonna like, it's gonna go against what you were taught.
Right.
But that's just what I do. I mean, you don't have to do it. Most people get out of their trade and just say, you know what, it's not going to work. I'll get back in later.
Right. But, so you say you double up to kind of make up for that loss that the other side may be experiencing. Now, then do you get out of it, or do you just kind of hold on and see if it's going to come back to it?
I usually hold on and see if it's going to come back.
So you may end up profiting on it.
On both sides.
Anyway.
Yes. Which is why I don't get out. Sides. Right.
She'll get out.
And also when you're buying enough time. So you bought enough time that you can hold it longer.
That's right. So it's all of those things. So I'm buying more time. I am doubling up on the I'm covering. So I'm hedging, and I hedge by basically spending more money on the other side. So what I was really trying to say earlier was, if we start to close that upper gap, then I will just simply buy a lot of contracts to go up, because we are really close to the upper gap right now.
Right. So to cover whatever you may be losing on that other side. Yeah.
That's right.
Then if the market retraces, even if it doesn't go all the way back to profit for you, you can still get out at a less of a loss.
At less of a loss. Exactly.
Right.
Exactly. You got it. That's it.
Okay.
I love it. We love you, Tanza. Thank you so much. All right. So I'm betting on it filling this fair value gap. Like the gaps are like magnets to me. So I'm with Tanza. It's going to go up before it comes further down. She's claiming the 45.15. I think she's taking that from the futures from the SPX, because the futures doesn't show as many gaps. So I just switched over my chart, and I can make it clear it out for you guys to see. All right. So she's talking about this gap right here on the SPX. All right. So she's talking about the 45.25 to the 45.05. This is the physical gap that she's talking about, because she's a very physical gap person, not as much as fair value gaps, but that's why she's here with us in the crib, to try and take advantage of some of that too. And so then we also have the gap to the upside. So this is the gap to the upside that she's talking about on SPX. So she'll use the SPX chart, see these gaps, and then take the trade on the futures, because the futures is a little more lucrative with a little less risk. And because the futures, the S&P 500 futures is in fact the S&P index as well. They kind of move in the same way. So if you look quickly, I'm going to do it for you quickly. So this is the SPX. You see the W, you see the chart. This is the futures. It looks very much the same. It moves the same way. And this is why we always start with the futures to do our analysis, because whatever the futures is doing, the SPX and even the SPY, switch to the SPY, boom, looks exactly, they do the exact same thing. And so you can get telltale signs of what the SPY is going to do by studying the futures, because the futures is going to trade overnight, right? And it's going to kind of give you an idea of what the SPY is going to do when the market opens, right? So again, they are all the same. If you really read up here in the corner, it says S&P 500 ETF. The SPX, is the S&P 500 index. And then you have the futures, which is the S&P E-mini futures, which is just trading, more contracts overnight and things like that. So they all align. That's why I have them all right in a line with each other. And they just have different prices. So therefore the SPY is the most affordable way to trade this move. The SPX is I don't even know what the right verbiage to use. Tan, you kind of, I don't know which more expensive, the SPX or the future. They're both pretty. They both could be pretty expensive.
I think SPX is definitely more expensive. Like I was just kind of, if that was that the question that you asked?
Yeah.
Yeah, I definitely SPX is more expensive. I was looking at some contracts last week because I'm short right now already. Just holding some contracts until next week just to see if we'll come back and retrace anything. But a put for just a couple of days out last week on SPX was $2,200, whereas it was, $1,200 on ES.
But you trade because I trade the futures as a whole.
Yeah, so you're trading the futures as a whole. So the contracts are definitely less expensive, like half. Right. And then you're only holding for your futures contract if you're doing the micro mini, just $1,200, right?
Right.
Yeah. So definitely less expensive.
It is. Yeah. I guess. Mm-hmm. I'm just comparing my like the overall mini, like buying it straight, because I'm
that $12,000.
Yeah, I'm usually in with about $14,000 of buying power, playing it straight because there's just less risk for me playing it straight.
Yeah.
I don't have to worry about no contract expiring. Just hope it comes back up.
Right. That's right. And that's also why I don't get out. If I were playing the big contract, like especially the big ES, I would only let it go against me like 10 points or because that would be a $500 loss.
Agreed. Mm-hmm. That's what I do too. I actually kind of even squeeze that a little bit more to a $300 risk tolerance. And it's like, if it's not going to be my move, then I'm done with it because then I know I can easily make up $300.
Yeah, because you can definitely lose a lot of money quickly on the big ES. That's why I started off with the micro mini, which was much better, but I lost because I started off at first using the big ES. So I'd be like, oh, I made 4,000 and then 8,000 lost the next day because, it went against me so fast. But, you live and you learn.
True. Facts.
Mm-hmm.
You don't trade with a lot of stop losses, do you?
Do I trade without stop losses?
Correct.
I have a mental stop loss, so I don't put a manual stop loss in. I mentally have a stop loss, so I'm looking at it, and I remember I told you that I do 50% stop losses.
Okay.
So, if I paid $1,200, I'm willing to lose $600.
Okay.
But of course, sometimes you lose that the premium goes away so fast. Like if we run up or go down really, really quickly, 50% comes within 5 minutes.
Yeah.
So, but that's my mental stop loss. But I actually don't put in a hard stop loss.
Me neither. And yeah, that's what I was like. I'm telling you, you're like we're the same, just 20 years older.
Yeah, right.
That's it. It's the only difference.
That's right. That's right.
Because I don't trade with stop losses either. And I'm not telling you, but you have to put in a mental stop loss. So like, I'm glad that she said it because I say it too. And my mental stop loss usually come down to a level that I put on the chart and I put an alert there because my thing is I don't want to get stopped out short. Sometimes you can hit that level and it can turn around for you at that level. So I just want to be alerted and then look at my candlestick patterns to confirm should I really get out. So she's, and I base it off the candlestick patterns more than anything. So whatever that equates to, sometimes it is about at the 50% level that Tanza is saying. Sometimes it could be a little bit more, but I trust my candlesticks more than anything else. And I just do a mental stop loss. Now, when I put in some trades overnight, it depends on the trade. It depends on the trade. So last week, once we got to like Thursday and Friday, I didn't trust the chart. So I put in a physical stop loss based on the candlestick pattern. Most nights that I'm trading futures overnight, I don't put in a physical stop loss, especially if I see something like a guaranteed cradle or a guaranteed pennant or like a guaranteed, like it just depends on the candlestick patterns that are forming for me when I get in, that I won't put it in either. And I just know price is going to hit there and I just put in my take profit and just be done with it that way. But it comes with experience. It comes with studying this market. You got to study. So, all right.
You definitely got to have some conviction not to put in a stop loss overnight.
Yeah, I do. And when I tell you, Tandra, Most of the time when I'm and when I drop my profits into Telegram, I want to say about 80% of the time I do not have any stop loss in overnight.
Wow, I am impressed. Your conviction is strong.
It is. It's just like, you know, it's going to do this move. Like, you know, some people sit here and say, oh, the stock market's not predictable. The stock market is not, you shouldn't predict the market. But once you get into the groove of the market, you just know. This is why Tanza makes her money too. Like, I know she can confirm this. You just know it's going to hit this target. And there's nothing to think about.
I love it. I love it. But like I said, when I sit here and I'm kind of monitoring and charting and like doing stuff in my sims, it's like, oh, okay, so I get it. I see what you're saying. The conviction is there with me as well, because I can see it in my sim trades. Because I'm very, my sim trades for futures is very profitable.
Because even just from what you know, it's like, even if it doesn't like blow through the water, right? It's gonna at least kiss the fair value gap. So it's like, well, it's gonna kiss the fair value gap. So I might as well just take profit at the fair value gap and just get out and then focus on my next move.
Right. So we got, for me, it's the fair value gap, and then it's midnight opening and 8:30 open. There's trades in there as well. It tends to do a certain type of thing every day. And so I guess that's what I'm trying to work to that conviction that you and Tanza kind of have that. But that's why I've been watching that midnight and 8:30 opening.
You already have it.
I know.
You are like, because you've been here with us for the long haul. Like, you have it. I think if anything, you know, maybe taking a few more stabs at it in Sims just to confirm it for you.
Right.
That you have it, so you know you could take it live.
Yep. That's where I'm at. I'm there. Yeah.
You're right there, girl. I know you.
I am. I'm right there. But like right now, like I said, the debit spreads are working for me, you know, since I can't always
to do the same move though. You're with the same conviction. You're just doing it with a debit spread.
Yeah. Yep. But the debit spreads allow me to swing trade, which is what I want to do. That's what I want to be. That's what I want to do. It lets me hold longer.
Agreed. I agree. They definitely do. It's just less worry with the debit spreads, but just put it out in the universe. In order to conduct debit spreads, you need an account of at least $2,000. Just letting you know that debit spreads is a more advanced strategy where you're buying both sides of the same. If you're buying a call and a put at the same time, and so you're going to need additional capital, and you're going to need a margin account approval at a higher rate, a higher level. Sorry. So you're going to.
Now you're saying a straddle. A debit spread is you're buying and selling a call or a put at the same time. You're buying and
you're buying a call and you're selling a debit spread. You're buying a call debit spread. Let's get real specific here.
Yeah.
A call debit spread. You're buying a call and selling a put at the same time.
You're buying a call and you're selling a call. It's buying a call and
I know how to do it. Buying a call is because look, verbiage, go by what I mean, not what I say.
Yes. You're doing both. You're buying and you're
buying a call and you're selling a call. You're right. Both calls.
Right. And if you do the put side of that, you're doing a straddle, right? That's correct. Is that a straddle?
Mm-hmm.
That's a straddle. And then a strangle if it's all the same strikes, right?
Mm-hmm. But either way, those advanced strategies, because the new people in the crib today, they're going to require at least $2,000 account minimums, all right? Or your broker will not allow you to do spreads. That's just the rule. I didn't make it up. This is what it is. All right. So we beating up the futures. The futures is now actively live. It looks like it's kind of slowly dropping. I'm on the 2 hour right now looking at it. I'm going to see how long it's going to troll in this particular range. And for all of the rest of you in the crib, go ahead and drop your tickers that you want to look like. Of course, I can go through my watch list, but if there's any tickers, I know Esther is usually burning desire. Because I see you, Esther. I see you, girl, on the other side of the state. I see you, girl. Go ahead and drop the tickers that you really want to look at, and let's get into charting some other stuff for today, so we can have our setups that we're looking at for the rest of the week. So I'm going to set an alert at 4509, because if it touches it again, I want to know if it breaks it, because our highs are getting lower. So like this high is this high, sorry, that was formed on Friday, is lower than this high that was set on Thursday. So if it continues to go down, then I want to know if it breaks, because I am definitely, what is going on? Like today, I've been having like computer issues, like a mug. I just want to like kill computer. Okay, this is the fair value gap move that I would love, 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 love to take. If it comes down and takes it. So this is the move that I'm looking for from the futures perspective that I want to take down. And this move is about 32 handles. I have no problem for $32 on the futures. That's $50 per 50 times 32, right? So I'm going to take that and be a very happy person. All right. So I want to put an alert at 45.09 because it kissed it. I knew it was going to kiss it. And if it was going to come down and break it from here and continue a downward trend to retrace this, and the W actually does fail, because if you look on the daily, that would, if it does come down here, it's a failed W. It's not going to continue to go up. So I'm just waiting on that to see what it's going to do. And if it does, if it breaks the 45.09, then I'm going to be ready to short the futures down further into the fair value gap, especially if it kisses the top here. So I'm actually put a daily line. I'm going to put a dash line on my daily at 44.96. And I can actually put an additional alert there. Because again, you got to put some type of alert. If you ain't going to put in an actual stop loss, please, 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 please put in an alert. So I'm going to see if it breaks down further from here, meaning clearing this whole order block. So this is my order block right here, right? And then if it comes and clears this order block down, then I would definitely believe like, okay, we're in the bearish position and I should go down. Sam's like, would love for us to break 45.09. That's because you done jumped into a whole bunch of debit puts. That's a biased opinion, y'all. Don't take that with a grain of salt. That's only because she's in debit puts. She's in puts. Okay. So,
but she also has a strong conviction of it going back for its gaps too. So
correct. So I mean, where's the SPS gap at? Let me look at this thing, because Tans be killing me. She's just killing it on this strategy. I don't see it the way she see it, but she been
because see, she calls these gaps, and we were like, "What gap you talking
what
about?"
gap? Because we're always looking at the. She's looking at the SPX. She's looking at the SPX. She's getting her gaps because the futures doesn't gap like the SPX. The SPX is always gapping. It gaps on gaps.
I'm with you. I wanted to go down to 45.09 too.
It gaps on gaps on gaps. So like, you gotta. And that's what she's talking about. And Tans, do you ever come down in a 15-minute? You could just drop that in the chat if you don't want to come back on.
I do. And actually the gap that I'm talking about right now is, I look at gaps on all time frames, but usually, yes, the 15-minute. And then again, I go to the 1 and 2 hour, but the next gap down that I'm eyeing, which is the next major one, is 44.26 to 44.05.72.
This one.
And that's because we also never closed the gap on ES at 44.14.25. So that gap has been left open, but that is 100 points away.
14.20. You want to what time frame where you want to see that gap?
Okay, so ES, it's the gap never closed down to 44.14.25. That was basically an opening gap on last Sunday. And then on August 28th, SPX formed its gap at the open from 44.05.72 to 44.
Little ass gap, Tanza. Like what?
That's a 20-point gap on SPX. 20 points. And so
gap fill. Like, are you kidding? I see it now, but damn, girl. The amount of squeeze you talking about.
Oh, you mean the one on ES?
Yes.
Yeah. The one on ES, that's just really, I use that one because the one on SPX has not closed. So they're going to close at the same time.
I agree. The one that you're right. The one on SPX, but though it's easier to see it on the SPX. I'm right there with you.
And that would be confluence for me as well. If I know that we have a double gap to close, meaning one on ES and one on SPX, that's greater confluence for me if we do start to enter it on SPX. When we if we ever get down to 44.26 on SPX, then I'd be like, okay, I will, get a lot of contracts and be like, okay, we've entered this gap. We've already entered it a little bit before, I think. I'm not really sure. Actually, we may not have.
Did
it enter it?
A little bit. It's like, to me, it's wicked out. Like, it's wicked out. I see I potentially, emphasis on potentially see your conviction here, but I'm just like, that is so close. Like, what? But you're not wrong.
Yeah.
Because price will come back and be gravitated to it.
Right. It's going to be the magnet as it gets closer.
And that's my concern, because like the double bottoms don't retrace as easy as anything else. Okay, so I'm gonna just let this week happen and I'll be like, Tanza, when did you close out of the puts? And you just let it go. Girl, I said it's here. She's seeing it, but she's right. It didn't fill because you see the fair value gap indicator is not filled either. She's right. I have nothing to say, but she's right. It's a double bottom for me. So the likelihood, because as you can see, it ran up after that. So it has to plummet. Now, what I can see is that it at least retraces from the future perspective. It at least retraces down into, this long candle area. But that gap, like what she's talking about, is like it has to take this out, this first fair value gap, and then come for the gap, because gap is below the fair value gap. And shit, I'm wrong. You can come on with that. It's definitely gonna probably come down into it, but it's that second gap that I'm just kind of like, what? But hey, to each their own.
It definitely has a long way to go to get there.
Yeah.
But these are when I actually, how when you say, how long have you been in? And I'll say, oh, I was in this gap like from, let's just say like I'm in at 45.80 and I wrote it all the way down. And it's because I saw that gap down there. So I'd be looking at getting in much sooner than like your 44.26 on SPX. I'd be looking at getting in probably around 44. Well, I'm already in, but if I weren't, I'd be getting in much earlier so I can catch more of those points, so that instead of it now being a 20-point gap that I'm filling, I'm going to fill it at 50 points. But that's just me. That is just me. So I would not advise anyone who's not experienced in doing this particular strategy to not do it, because most people wait for the entrance into the gap for confirmation.
Correct.
But because this is what I tend to do all of the time, I just stick with what I've been doing. But again, it's not for everyone.
Disclaimer,
I can tell you, T, that when Adobe was taking like 30 days or 60 days to fill that one gap it did last year. It took it like, I want to say it took like 3 months to fill it or whatever.
Right.
I was in and out of that gap, but I would get in early and ride it up to the gap. And then as it went into the gap, and then when I saw it reversed, then I'll get out, and then I'll get back to it another day. Yeah. So
that's right. It's kind of the same concept,
Yeah.
If you know it's coming, you can kind of trade, in the interim.
And I have that confidence with Adobe because I've watched it long enough to kind
of see you're used to it.
To move. Yeah.
Mm-hmm. Exactly. And that's really all it's about regarding me and trading these gaps with SPX using ES. It's really that I'm so used to doing it that I can see when it's truly turning around and not going to fill it, or when it's just kind of meandering around in the area and that it will fill, it will just take a couple of weeks, or, oh, this one is going to take, 3 months or what have you.
Yeah.
I get it. You got to learn your stock. You got to take time and just study the movement of one. And then if that isn't enough conviction, Tandra just said, Adobe, she's been studying it so much, she understands how Adobe moves. And then, Tanza
Adobe look just like ES.
I understand how SPX moves. It's just all about that. So we'll look at the SPY because Esther dropped in the chat. So can we look at this on the SPY play? And we definitely can. So I'm starting with a blank chart as always. We have SPY on a monthly looking very similar. So what you thinking, Esther, from based on everything that we said? And I know you already know overall what you look at.
Hey everybody. Well, I agree. I think that we're definitely going to try to run up. I'm just a little concerned that if you click on that articles little emblem right here at the bottom, there's an article there that will scare the hell out of us because what they talk about is the fact that there are a couple of COVID variants that are starting to make news again, and they use the words lockdown again, and I had a seizure. So that bank holiday, ISM, and other can't miss items this week. Yeah. If you scroll down after the earnings, bank holiday, sure, unemployment. Yeah, but COVID, that just terrifying, just a little terrifying.
We already know Florida won't be locking out of nothing because we are invincible according to
COVID took, I mean, Florida took the shortest COVID break ever.
Because COVID wasn't real, if you live in Florida and we have the devil for governor. So, man doesn't even understand how to teach history. So we're not even going to go there, right? So, but this article scared me a little bit when it came to the fact that there aren't a lot of announcements this week. It is a little flat. Earnings are not like anything to get excited about. So we could just chop, right? I'm a little concerned that we might just chop.
I believe we're in the chop. I'm right there with you, Esther.
I was looking at SPY with two options basically. With if it goes up, then if we break above where we close and stay above 452, I would actually probably do it at the money strike or a little out of the money at 452, and then just targeting that 455 because this is gonna be a double top, and I don't know if we're gonna have the momentum and the liquidity and the volume to break it. Right, we have that little doji candle in the middle of here and that high at 476. I'm just feeling like, yes, that looks a lot like we left kids in this little run up here, but at the same time, I just don't know if we have it to take it, So, but I would jump into a very short term play because I tried writing this last week and I got out, right? Because we were all trying to write it up to 455 and it said, maybe not this week. So I got out. I kept it in sim and it's a horror show. So just to see what would happen if I didn't get out. So yeah,
so I'm in a debit spread.
Right.
Esther and my debit spread. I have a 450. My buy side is a 450, and the sell leg is a 450 call, and the sell leg is a 455 call, and it's in right now. Well, because it's a debit spread, it's in profit right now.
Awesome. Yeah, I spreads are Greek to me, like literally Greek to me. I'm like blah 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 blah. So I just I like doodle on my paper when you got to talk about spreads. I look at charts while you're doing it because it doesn't make sense to me. I'm much more comfortable just going long on with the calls or going short puts. So I'm just looking to see if we pick a direction on Tuesday morning, that would be nice. So, but yeah, that's this gap on the daily chart right here. That's exactly what I'm worried about. I would love to think that we could take it and get out at 455 and have a nice day and then see what happens the next day. Right. But we'll see, because we could also swing down and take that itty bitty little fair value gap around 450 and then come to this big ass one. Yeah, that's what I'm worried about right there. So I have puts and calls on my list of let's see where we go and how we play it, because I just don't care what direction we go in, long as we pick a direction. That would be nice.
Yeah, I'm with you, Esther, on the fact that we may chop most of this week, especially since we don't have a lot of Forex Factory red folders.
Yeah,
this week.
And when that happens, we're usually better off looking at individual stocks instead of SPY, because SPY doesn't move as much for us. And for those of us who like to get in, get done, get out, get in, get paid, get out. Yeah. That's I think Adobe might be an interesting one to take a look at too, because they report earnings on September 14th, which is not this week, it's next week. But Adobe usually tends to have some fun with itself on a good day, let alone on the way up to earnings. And a lot of people are starting to talk about Adobe as the way to play AI without having to buy NVDA. I mean, it's just as expensive, so I don't know why everybody thinks it's such a steal. But DocuSign is also reporting this week, and that will be an interesting conversation around the differences between DocuSign and Adobe, because they do have some crossover when it comes to a little insight right into what Adobe might talk about at their earnings release based on what DocuSign has to say. So we shall see. And Salesforce let us into it last week. So let's see what we think.
So let's look at Adobe. Great segue into Adobe. So we got Adobe looking like it's approaching its weekly fair value gap. I mean, monthly, sorry, excuse me, monthly fair value gap. Should there's solid lines here. So monthly fair value gaps here. All right. So I always like to square off my monthly fair value gap if I see one. All right. And it's most likely going to kiss it and come back around because it is, in fact, a monthly. It's a stronger time frame. So it's probably going to just do a big reversal back down. Now, because we have a hammer here, the retracement back down may not be as strong as you may think because this candlestick pattern with this long wick, it may not drop down as much. So we would have to look at that. Dropping down to the weekly time frame, we can see how our lines from the monthly line up. And then you can see that we have a weekly fair value gap in between here that is showing up at 607, right? So there's the weekly fair value gap close. Let me line it up exactly. Squint when I get it right, Randy. Y'all know I wear glasses or contact lenses, so I can't really see. So 605, 63, and that's going to be your fair value gap for the weekly time frame. So it is coming up to kiss that. It did completely fill its gap last week, and this is the reason why it ran up the way it did, because that magnet pulled it right up into it. And Tandra did a great job of taking advantage of it. So congratulations, Tandra, on that profit. So we're going to go down now to the daily, and I'm right now, I mean, I can mark off some bottoms. So let's mark off some some support, excuse me, while I'm here. So we have the support, the weekly support at 512, and it aligns with the fair value gap between 512 and 490. It does have a very strong even morning star pattern. Sorry, I always just go by what I mean. I want to say, y'all, I just always inversely say this, but morning star pattern, a great V pattern coming up here. So the likelihood of it dropping back down anytime soon is going to be very, very slim. And then as you can see, as we drop down to the daily, we have a nice cradle pattern, right? The cradle pattern is what I identified up on Friday's call. So we have the cradle coming down. We met the neckline, which also aligned with the gap. Adobe said, I don't want this gap anymore. So it went ahead and cleared that gap, right? So I can mark it off for you just in case you don't see it. I always use purple lines for my gaps. All right, so we have the gap right there, the physical gap. It came up and cleared the gap. It tested the gap at this long red candle, right? Gap price gapped up overnight, opened up here, and then dropped down. That was its test to the gap. And then once it retraced itself, it came back for the gap and filled it. That's normally what happens in almost every trade. And so it's what the market likes to do to balance out its liquidity. And so now if we come all the way back here to previous data, we see that it also cleared this larger gap, you know, at 45.54. So if I mark that line for you and come back to current price, you see this big long breakaway candle came up and finished clearing out that complete gap. And so from there, now we're heading to the order block. The order block, again, is an area of choppiness where price just kind of consolidated and made a cluster of candles, right? So we can see here that this is the order block that it is now testing up to. There's a lot of liquidity within this order block. And of course, if you look again, it aligns, that order block is aligning right with another gap.
Yep.
All right. So we have another gap. Another big gap to trade. Okay. Another liquidity grab right here between 578 and 615 for price to come up. So price is again being pulled toward gravitational pull, whatever you want to call it, magnetism, whatever you want to call it. I don't care, but price. And so here's the thing. We have this monthly line at 57, 574, Randy, get it right. 574, we have this monthly line. The daily gap starts at 578. So what that's going to mean is price is definitely going to be pulled up this way because you have monthly and daily confluence. So I expect Adobe to continue up. Now, here's the tricky part. Is it going to bounce off the monthly or is it going to bounce off the daily? Any votes? Especially for Tandra, since she played Adobe so much. Like nudging Tandra.
What is it? Oh, you're saying is it gonna, where are we? So which one's the monthly? The 574?
The 574 is a monthly and the 578 is a daily gap.
574, 578.
Mm-hmm. And that 574 is right in line with these wicks and this choppy order block. Are you in Adobe still?
I know it filled me. So okay. No, I didn't get back in.
Okay, gotcha.
I'm taking a look now at the monthly calendar, at the monthly. So right now,
because that's the monthly entry to the fair value gap. Is a monthly fair value gap at 574. So are we gonna wick? Can we?
Oh, you did that to fair value. Okay, I'm like, where are you getting this 574 from? I see that
the fair value gap. Mm-hmm. So you think we're gonna wick?
I think it may bounce off of it because I'm thinking about Friday's move.
Okay.
It may push, it may test it. I think it's gonna eventually go through, but it may be testing it right now too. So
I definitely think it may test the monthly before the daily, but
yeah,
also recognize that it could wick the daily.
So what it did
at the monthly.
Right. So Friday it wicked up to almost 570 and rejected immediately.
Mm-hmm. I agree.
So yeah, I'm thinking it's going to it may hit that 574 and just it may test it a few times.
So
it could be like that Home Depot gap. Remember, Tandra, how many times we played it?
Yeah,
it must have hit it 5 times before it finally broke through. Right. So I agree. I think it's going to tap that 574. It's going to hover around that and chop in that order block, I think, a lot.
Yeah,
and I think
but you can make some money from the rejection and then going back
in
up
and out.
Yeah.
Yes, ma'am. That is exactly what I intend to do. But yeah, I think we have a clear run from here to 570. And depending on if it doesn't just gap up and do it at the open and we all miss it because there's no time to get in. But I would like to see it try. I would like to ride it.
Yeah, because the rejection was very strong. It was a strong rejection on the 30-minute on it from that candle, from that 9:30 candle.
And the fun thing about playing Adobe is that it's a cowboy, right? It's going to do whatever it wants to do. It really doesn't care what the rest of the market's doing, right? So it's just going to run if it wants to run. But because it could run down too. It could test this fair value gap down here at 560, right? Yeah, 559 right here. Yeah, it could come to that. I mean, and break all our hearts before it goes back up again. So we shall see, because it can move wild like that. It's kind of it's starting to remind me of riding a mechanical bull. So we shall find out.
Yeah, so right? That's like I said, because even with this gap that it just completed it took it over. I think I held it for it probably took it about almost a week, was it? Trying to think how it did this last run up to this.
I think so. I think it did take about a week to finally push through. Yeah.
I removed the gaps.
3, 4, 5 days.
4, 5.
5 days. Yeah. So that's what. So I'm thinking, Randy, it may just it's gonna play with it. It's gonna probably reject from it, and then it's just gonna run through it.
It's gonna be like having an outdoor cat that brings you a piece of a bird because it's showing you it loves you.
Yeah, it's gonna be like that. Analogies. An outdoor cat that brings you a bird. Where's Maria?
Piece of a bird. Like, yeah, where's Maria?
Maria owns a cat.
So, but yeah, I like playing Adobe, 1 month out and just taking my money and going home, going on with my day. So
I agree. And Adobe does, where's my average true range? And get my chart set back.
Oh, I could say.
So on the daily, the average true range is the average of pretty much the average per day, roughly. It's over a 14-day period of how they calculate this. But it's basically telling you, that Adobe will move at least $13 a day. Now, at least, and emphasis on the at least, because Adobe will move what, $21, y'all? 20?
Oh yeah. It can
in a day?
But you have to remember, it also does the entire $20, right? Like it'll open, it'll go down $5, then it'll go up to $10, then it'll go sideways for an hour or two, and then it'll go back up another $7. So you really don't even know which direction is up by the end of the day if you try to follow Adobe all day. So it's more a question of having a target. For me, at least, trading Adobe has been much more successful.
I agree. You need a daily
trading a target and using the wicks, using the charts, and you putting in exit orders. Because I agree with you. Will confess I also don't use stop losses when I trade like this, but I use a mental stop loss and watch it, and I'm pretty much hovering over it, like waiting for a baby to be born. But when it gets close, I put in those exit orders, right? Using Thinkorswim's way of calculating the option price, what based on the underlying stock price, and that's been very, very effective for me. So I highly recommend using that for anybody new on the call that's not doing that yet. So
I don't know if any of the brokers give you it. I know Tanza.
No, not that I know.
Not on Thinkorswim. Tanza, I don't know if you ever remember me showing you that underlying calculated price when you're setting the options premium. I can't remember who you use, but does your broker show you that? Like when you're on the computer?
Oh, say it again, Randy.
So, oh God, of course I don't have my options chain open. So, I don't know if you recall me showing like how you can set your options take profit order based off the underlying price, and kind of how it does the math for you without going into like the options probability calculator and all that jazz. Who do you use again to trade?
E-Trade.
E-Trade. Okay, so does E-Trade have anything similar when you're on your computer versus when you're on your phone?
To get you out of a trade at the basing it on
underline where like when you go in, I'm about to pull it up on my just give me a second, it's coming.
Where to tell you what the strike, what the price will be. Yeah, it's actually
like there was this Maria put us on to it, I ain't gonna lie, because she's just good like that when it comes to these platforms. But basically, come on, you're almost there.
Now I can tell you on debit.
So basically, if I was in NVDA, right, and it doesn't matter what I'm doing, buying or selling or whatever, right? And you see how there's this expected NVIDIA price. This is the expected underlying based on the premium. So if I start to toggle through, right, or set the premium a certain price, my expected is going to change the expected underlying. And so my question is, do you have
does E-Trade have it
with E-Trade?
Okay, I'm gonna make a confession in that I've been using E-Trade since 2009. Ooh. and they have had, and then they started Power E-Trade sometime I think in 2019. I only use the Power E-Trade for futures, which means I don't have that particular, which means I'm not looking at what you're looking at. Okay. But I'm almost positive that they have this if I were to use Power E-Trade using the trade for equities. I just have not, my confession is I have not researched it or even gone into the account to really learn the new updated Power E-Trade, which is where they have all of this. Yeah. Mm-hmm. So that's me being lazy. I just stick with the old platform, and it forces you to use the Power E-Trade for futures trading, but it doesn't force you to use it for regular options trading.
Okay.
Yeah. So I haven't taken the time to really look at it, even though people are like, oh my gosh, I can't believe that you're not using Power E-Trade. It gives you so many other, options. And
right.
Yeah. But I just haven't done it yet. I don't know why. I think because I'm so, been using something since 2009.
Out of complete respect, the older you get, the harder it is to break out of your ways.
Definitely. And the fact that I'm only 51 says something because I'm totally stuck. I'm totally stuck in it and saying, no, I'm good until I really feel like I need to utilize one of the options that they have on Power E-Trade. So yeah, we'll see.
Does anybody use Fidelity in here?
Yeah, I use Fidelity too. I have, yeah.
So you use the Active Trader Pro?
I don't, because I don't trade in my Fidelity account. I'm only buying CD ladders and dealing with IRAs in there. Yeah. So no. So see, that's the same one. I probably should use out to, I mean, I said use out. I should probably look at using all of the intricacies of the Fidelity account too. But again, that's me just wanting to stick with, yeah, I know. That's, yeah.
Y'all 50 plus people kill me. It's like,
yeah.
it's get out of, you can learn, an old dog can learn new tricks. Like, oh man, that's no problem. No, I just wanted to see based on the other brokers if it gives you that. So let me go through the watch list and let's knock out a few of these other tickers for today and let's see what setups. I really believe that next week is going to just be a choppy week. So I'm not like overly enthused about charting or about like taking certain trades. I'm going to try to catch some of the intraday moves. I'll move stock conquer. I'm good. But I am going to make a social media post to like just squash that. It's just like, no. So let's do top down analysis: Apple, Amazon, NVDA, and Lilly, unless y'all have other tickers that y'all want to drop in the chat, and we can go from there. Because I'm with Esther. We need to focus on some of these other like individual stocks to make our money, because I do think the ETFs are just going to stall. So especially since it just confirmed this W. So with Apple, we have the monthly time frame here. We are going to mark off the top of the monthly, right? And then we're going to keep it moving from there. And what, 198. So price has retraced pretty far down, but it's making a very significant like U pattern or Morningstar pattern to come back up to the top. So from the weekly perspective, we can mark it here. I can make a slightly thinner line so it can keep coming up. Y'all are hilarious. I love y'all though. So we're coming up to fill its weekly fair value gap. So I can mark that too at 192. And then we can look at the bottom side. So I'll mark the 2 candle dip here. And we'll go in from there to go down to 178 as support. And then that will come to the daily. And we shall see that Apple is overall filling a gap, right? And this gap, gap fill, is about right under about $1 shy of that weekly resistance line. So it's pretty much almost there. I do expect it to get there, knowing Apple, because I have followed Apple for quite a few years now. I actually got a few years because I used to hold Apple as long term. So I was watching it quite intensively when I was back trading crypto. But overall, we're breaking up, we're going up. It's doing a bit of a doji action up to the top, but it is doing it. So we can kind of get into some calls, because I do expect it to finish this out. If we come to the 2-hour, here's the top of the candle. It's just shy. The top of the candle is just shy of that close, about 15 cents. So it looks like it still wants to continue on that trajectory, and you can take advantage of that short-term move if you want. And then from there, I do expect it to bounce and turn around. Now, if this is a doji, so we'll see if it wants to like engulf it or whatever, but I'm going to take profit right at the gap close and then just kind of wait and see what price wants to do, based on the fact that I believe the ETFs or whatever are kind of stalling out for this week. But Apple may do that small term move, and $2, depending on what contract you buy, may not be too bad with Apple. So looking at Amazon, again, if you guys have any other tickers, let me know. So CAT, of course, Esther, I won't forget about CAT. So looking at the monthly view of Amazon, we do have a baking candle here. I love how Claudia, I don't know if you, Claudia, yeah, Claudia's here today. Shout out to Claudia for calling it a birthday candle. I love you, Claudia. But I'm still young and a little rough around the edges. So we going bacon, birthday, whatever you want to call it. I'm gonna get this bug out of my way. These gnats in Florida are killing me. So we have the high here on the monthly, the first part of resistance up here at 164.05, and we're going to allow price to kind of retrace up that. We do have this wick to clear, so be mindful of that. We can mark these two levels of I love it, Claudia. We can mark these two 146.80 as an area of Amazon we need to break through in order to finish the bacon candle. And if it finishes the bacon candle, it'll be also taking out the order block coming down to the weekly, right? We see it coming through this area of kind of like stagnant little gaps in here, but we definitely needed to retest up at the 146. So it is a pretty nice move from 138 to 146. That's about $9. So of course, price is going to be pulled that way. So we can believe that price is going to continue up. The top of this next level of resistance is going to be a little bit shy of that monthly line, and it's going to be at the 143.92. All right, so 143.92 area is where price is going to probably get bounced to. If we measure that level, we are coming in at $5.44, which is still not a bad move for Amazon. So you can take it from there as well. And then coming down to the daily, you see that we have a nice little W here. It has made the W, and we're right into the daily order block, and it is chopping up as so because we have a nice little red candle coming down. So we would need it to like wick up here, probably test it, beat up against it before we get a nice area of, before it can break through and continue on up. So we just got to take it in strides, take it one level at a time, throw up some Fibonacci if you need it. Here's also a gap close down here on Amazon. Amazon's just been a little wonky for me per se. So I'm just staying out of Amazon, and I'm actually looking for Amazon in particular to do more of a covered call strategy, buy a bunch of shares and just play covered calls on it in the long term, because it's lately it's been just yes, it's on the upward trend, but these short candles have been ticking me off. So I'm just going to probably do cover calls on those shorter term moves while I wait for the longer term moves. So that's kind of what I'm leaning into as far as Amazon goes. NVIDIA, of course, is always expensive, and it's trying to make more all-time highs. So I think right now it's testing up against, its previous all-time high. And we need to at 503. So we need to break that to continue going up. It's been a very, very nice uptrend, as we all know. NVIDIA is killing the doggone thing as far as AI goes. We do have a weekly gap, right? We have a weekly gap here at 44.44 and 44.33, sorry. And we're going to continue. We did like a little retracement move into this bottom weekly fair value gap. And now it's just trying to test to see if it wants to break out the upside. I don't know what news is going to need to do so. I really don't. Looking at new, dividends are coming up soon. So we'll see what that does. We're just going to have to take an eye on some fundamentals here to see what NVIDIA really wants to do. Right? Because it's just kind of chopping around a little bit in this area ever since it blew up to the 400 area. It's been moving up, but it's been very, a choppy move up. It's been having some ups and downs and a little bit of confusion there, but that's all to be expected. So we would like it to break its all-time high, and I can actually move this down just a little bit because it doesn't really align with the daily as much. So 502, let's set an alert. We'll see what it does there. And maybe I can go in for some long-term calls Maybe hopefully before earnings, because obviously I can't stand trading NVIDIA during earnings because it's just too expensive. But shout out to Esther for giving us SMH as an alternative, cheaper way to trade the NVIDIA move at the same time. So I appreciate you guys for that. So let's move over to Cat before I get into some of those other funky ones, because Lily is a funky one, Tilray is a funky one, and we already did Adobe. So here we go. Caterpillar. All right, so Caterpillar is moving. Let's go to the monthly. This is a new month. All right. Caterpillar kind of looks like it wants to just keep climbing and climbing and climbing, up and up and up. And I know
Caterpillar's at an all-time high, so
yeah, so the all-time high
Mhm.
is, let's get 293.82 for monthly. Weekly, same thing. It has a nice morning star here. Didn't really want to come completely fill that gap, but nice job, Esther, on taking part of that gap. And now it looks like it wants to actually, me personally, when I see a doji like this with a long wick at the top, it usually wants to take a lot of this wick because there's usually a lot of liquidity in the wick. We'll drop down to the 2 hour and see what it looks like. I really can't stand these mosquitoes. I can't wait till winter up here. I really can't. So we are, that's not the color I wanted. I wanted red. Daily, I want dot dash. Okay, so 288.86 is what we're waiting on it to break. Esther, are you looking at a move to the 280? I mean, it's only like $2. So what
Yeah,
are
that's
you thinking?
I don't. That's a good question. I actually want to see what it does. I think it's going to actually run up into that 290 range, but I mean, because
Mhm.
if you go back on the 2 hour, I mean, yeah, but it's all wick. I mean, that scares the crap out of me a little bit.
I
So
don't blame you,
yeah,
girl. I don't
and there's a
blame
tweezer top. If we look at that as almost the tweezer top here, right? Exactly. So
you.
I'm
Yep, I got
thinking 290, close to 291 if we're really lucky, and if there's momentum and everything else is going sideways. Caterpillar's been the only thing holding up the Dow. So that's been rather interesting too. So I
you.
feel like they could just keep running. It could blow this and keep going up, but I think it needs some volume to do that.
So
Unless there's
on the
that people unless tech starts to
287,
fall.
we'll look at the
Mm,
NASDAQ before we get off the call.
okay.
NASDAQ futures and Dow futures just to confirm
Yeah.
that sentiment.
But I'd want to see it.
Um,
I'd want to see it going up, to open the market and then jump in and just ride it up to that 289, 290 and say bye. Because if it can break
yeah,
through, I think it'll test that 288. I think it'll test. There's that little, it's an itty bitty little fair value gap in the middle of these lines. Yeah, it's tiny back here. Go on, see this little, there you go. It's
daily
tiny.
50.
I mean, really, it's like nothing, but it's above the 288 and below the 290. So it's on,
Yeah.
let's see, it's on the candle. August 2nd at noon. It's a noon candle on August 2nd. There's a little fair value gap on there, but that might be the only thing that'll make it pause before it gets to 290. But I feel like it wants it. It's taken so long for Caterpillar to come up this high that now I think it's going to test it and it's going to try to
You got
run.
an alert at 287 just to ensure it breaks its previous wick. I mean, its
Yes.
previous high. All right.
Yes. Yeah, I'm not
It
in it
is
right
up
now,
into
but I
that
will get in.
scary zone of like short term
Yeah,
move.
I
Like,
want to see it. I want to see what happens because back in the old day we would call that a sell zone, right? So and
mhm.
it's filling a gap on the daily. So if it gets to and it closes above that 487.50, I'd like to see what happens at that point. I'm not 100% convinced it's actually gonna go higher than that.
I'm right there with you. It does look
So,
like, it is doing like that, like swoop move, but it has to clear it in order for us to be sure.
mhm. Right.
So
But the
no, you're
options are
right.
pretty inexpensive. So there's an opportunity here to do that. Like Apple, same thing, right? Like it's a little more affordable than trying to play Adobe or NVIDIA. So,
Facts.
or
It
Lily for
definitely
that matter.
yeah, I'm about to go to Lily right now.
Awesome. Thank you.
Lily is trying. there's no point in
Again,
recharging.
all-time highs, right? Like we're just gonna have to wait and see what happens.
Basically, because I don't,
Mm-mm.
there's nothing to recharge right now
No,
at the
right.
moment.
Yeah, right. No, there isn't. There just
Um,
isn't. And it's going to have to, it's consolidating though. And to me, this, I don't know why this would be an order block because to me, it's really expensive to buy this out, even for smart money, right? Like this is really high for Lily. But unless they feel like there's nowhere to go but up, I guess we're going to find out.
favorite playing the safer
Mhm.
top pay for weight loss drugs. Some
Mm-hmm.
keep second jobs, bring up credit card debt.
So the only thing that I think will bring Lily down back out of the rafters is the fact that it's got in development a weight loss drug that they're going to use for diabetes, but also specifically for obesity and one for Alzheimer's. Both are in clinical stage 3 trials. So that's a really good thing. The problem is that everybody in the government's starting to actually talk about negotiating prices for Medicare and Medicaid, right? Like we're the only country that doesn't allow the government to negotiate drug prices, which is a bunch of shit. So when that happens, Lilly is going to become one of those companies. It is not right now, but I promise you that it is going to end up on the list once those 2 drugs get approved because so many people need those drugs. So, there you go. So they're already feeling the pinch with the insulin, and they've already said, yes, we're going to make insulin cheaper. They've been a little slow to actually make that happen. So that kind of bugs me a little bit since their stock is screaming. But,
Well,
you know,
so let me ask you this question. With all, at least since I'm on social media, like a lot more, and like, granted, some of, old school is still very much like, I just need the medicine, right? But you
mhm.
have so many young people that are like, I'm not for the medicine, right? Like, I'm gonna eat my,
Oh,
potentially
baby,
gonna eat my
the
fruits and
medicines
veggies.
Lily's making are not for young people. The medicines are for those of us who already have diabetes or already are fat and need, or already in line to get Alzheimer's. So I feel like there is such an enormous market in the near upcoming future. I mean, yeah, you're right. Your generation probably not going to need these drugs, but
Yeah, but
Lily don't care.
our generation can influence the older generation to stop, right? Like to just, I
You're
ain't saying,
adorable.
look, I'm right. You're right, because some of y'all just stuck in y'all ways. There ain't nothing I can do about it.
Hey, I live in
Okay.
a
But
55+
there's some
community.
of
Trust me.
y'all that are willing to take a more healthy approach, right? Like, like you're
Absolutely,
looking at the
absolutely.
drug, but you yourself are like, I'm not gonna just pop a whole bunch of pills just cause, like there's other ways to do
Well,
this thing.
bear in mind too that these pills are somewhere around $2,000 or plus or more a
And that's what I'm
month.
saying. And
Right.
once you reach retirement, you're not trying to pay that.
No, and neither is Medicare or Medicaid. See, that's what I'm saying. So when Lily ends up on that list where the government says, yeah, these prices are too high, we need to have a conversation about that. I think that this stock will come out of the rafters. It might very well be $100 higher before that happens. It could.
Okay.
I actually would not be sitting here in disbelief if Lily skyrockets another $100 before the government ruins it their day.
Right. Now, fair enough.
So, because those drugs haven't gotten approved yet, right? But this is really high for Lily. I don't know if this chart is not telling us get in right now.
No, definitely not. I agree with you on that.
Okay, thank
It
you.
looks like it is working, go back to it. It is working towards a breakthrough of some sort because the order block's forming, right? So it got to break out at some point.
A girl can dream. Yeah, absolutely.
It's got to break out. It's just a matter of up or
Right.
down.
Well, and if it goes down, I mean, look at where it can go, right? We've got that to 533 is a nice run right there, but we could go all the way down to that next fair value gap. I mean, that could be one hell of a ride. So
Right.
if we were to short it, but I hesitate to short really strong companies because that's bitten me before. So we shall see.
All right. So here's our cannabis company, Tilray, for all the cannabis friendly people in the house. Fairly cheap, inexpensive, going up to um I see this gap right here at 325. So I'm wondering if we could take it to the gap. Potentially, I know the only other person that's trading this with me is Claudia, but yeah, it's possible. I don't know if she ever got back in or not. Claudia to come back into this. I know I got out, kind of told my preference, and I kind of sat out. If you've been in since the turnaround, congratulations, because I wasn't paying attention. Kind of got focused on ES a little bit, but I'm looking to see if I could potentially take it up to 325 now, especially since it's kind of clearing this high before it turns back around, and then kind of just take it in stages, not really trying to do too much in the monthly and stuff when it comes to this company, the cannabis company. To me, I mean, we know we have like a lot of room for it to recover, but the top-down analysis for this particular company, and it's only this one, just doesn't seem like it's worth to do because it just has so much recovery to make. So I'm gonna just keep it on the daily and just take it one level at a time from the daily perspective. Oh, look at you. Hey, go with Claudia. That's what I'm talking about. Hey, I'm so proud of you. Congratulations. You know what you're looking at, girl, when you be dropping stuff in the Telegram chat. I'm like, now you know what you're looking at. But I understand just having the extra set of eyes on it. There's no problem with that whatsoever. So let's see if we can make that happen. I think I'm gonna get back in this week and see what we're gonna do with that. All right, before we get off this call today, let's look at the NASDAQ and the Dow, and we'll take one other look at the S&P and kind of see what it's doing. So I'm gonna start with the weekly with the futures, because let me just take a glance at it. Yeah, I had a feeling that the monthly looked like this. The monthly doesn't help too much. I mean, it's a great tweezer top, but if you want to mark it, and go ahead. That chop doesn't really help me much at all. And then weekly, 37, 35, 705. Top of the fair value gap or the close of it, 3506. You know, y'all know I just chart this for the sake of looking at levels. I'm not really looking to trade it. So that's the entry. No, that's the close of the fair value gap because it's kind of already in there. So daily, the price, this is the order block up here. So it tested it. Technically, to me, this is kind of a test in it. And it needs to finish out at least the breakaway candle from it. At least. Wrong button. So we need to at least do that. 35, 35, 35, 34, 5. Lord have mercy, Randy. Can you read today? So we're going to see if we can get up there. It did do the retracement move down. It didn't really fill its fair value gap. So I'm wondering if it's going to do like a quick wick move action down there and then come up. Because it's possible. Just leave a wick in there just because. So we can just say it filled it. Especially since the trend has been a little bit downward here. So now we're on a 2-hour. And the close of this is here. 34,685. So we're good. Like it can come down. Like I definitely see it coming down and then potentially turn back around. And this still, the 2-hour chart on the Dow futures is still giving me choppy vibes. Like price is going to be short-term moves. Not saying you can't make money, but it's probably not going to be as much profit as you are used to because it's going to be short-term. Because here's the order block down here. And once it tests it, then we need to look back at candlestick patterns to see if it's going to like go through it. That's the king. We always know it's gonna test the order block before going through it. Depending on the news that comes out with it, it can go straight through it. This order block to me looks like you may not have the news that's gonna align with it to take it all out at one sweep. But we'll see. And then the NASDAQ, My daughter playing my chart. Just start from the beginning. All right, so I see the potential M, Tandra, but I really want this to be a W. So I really do,
Yeah.
I really do.
I'm with you. I want it to be a W as well.
Because it's a W, to me it feels W-ish down here.
Right, I agree.
So I'm like,
and they all are looking alike. I like all these charts look alike.
They do. They're starting to blur together. I'm like, ugh. But this is how we know we're getting into the boring phases of our charting. That means we're just going to be profitable for here and out. As soon as trading gets boring, that's when you're profitable. Ask Tanza. Right, Tanza? It's boring, it's profitable. Good luck. It's just the nature of the game. So the weekly is coming down to, let's see, 2.0. 14,762. So take my time and read these numbers so I won't be shouting out the wrong things. Support. We'll see if it makes a short-term M on the weekly. And then, but see, every time I come back, so the monthly and the daily to me, the monthly and the daily look like W's. And then the weekly looks like it could be a potential M, but it's not done yet. So I don't know. So again, we're kissing up. So we left kids in this daily fair value gap as far as I'm concerned. There's kids up here. And at some point, you need to come back and take out the kids all the way up to the top. So let me go back to the Dow. And if the Dow does come down, it's going to be a short-term retracement, I feel like, because it still needs to finish. So to me, the Dow needs to finish the larger candle from the breakout at, 35,345. And then the NASDAQ needs to finish the fair value gap, the daily fair value gap at 15,730. That's just what I see. Now, how long it's going to take, God, please, not 4 days, 40 nights. But if it is, we know how to take advantage of the intraday moves in between that as well. So just hold, to me, all the charts look like they're about to chop. Like this week, I mean, if you have the conviction and you know what it's going to do, especially if you see like a Globex gap or something like that, then go and take an aggressive approach. But if you need more conviction, then go and take a conservative approach and just kind of make, smaller profits on it just to be safe. The whole point is to keep the account green, whether it's little, big, or whatever, just keep it green. So, to me, the NASDAQ look a lot like the futures right now. Like a lot like the futures. And so when I come down to the 2 hour for sure, to where I'm just like, okay, are you going to clear the order block down here, this order block right here, and then come back? Or is this order block? My question is this order block? That's my question across the board. All right, Esther, I can take a look at Lulu for us and see what you're looking at. I think she jumped off too, but we can look at it because I didn't see her comments. Yeah, Tanza, you're just an aggressive trader with a conviction, and there's nothing wrong with an aggressive trader. It takes experience to get there. But we'll look at Lulu since she dropped in chat right quick, and then we'll see what it do. So there's earnings for Lulu, and it just rocketed all the way up. We still got some highs to clear back here with Lulu. So we need to clear this. So just caution yourself. This week, find the outliers that are gonna do its own thing, of course. But You know, we know Adobe can kind of do its own thing. We see Adobe running up a little bit, switch it back to Adobe because Lulu can sometimes just get on my nerves. I ain't gonna lie, it's a potential. That's just my bias. But we have, a little $4 to $5 move if you can take it, at least wick it to the gap, the daily gap. That's an $8 move. So just look for those, those rebels of the market and do your move from there. 411.03. How much distance is it? It's not too much. So you get an exact $7 if it's gonna break this high. So it could do that. But from there, because we have all these candlesticks here, this is the next like shoulder peak, this doji and this like on this evening star pattern. So we can mark that as a daily. 434.33. If it breaks this level at 411.03, then we can take Lulu up to 434.83. So there's moves to be made for sure. We always know somebody in the market is going to run off. And of course, I don't have every ticker here. So pay attention to earnings. We'll come in on Tuesday. We'll look at earnings. Right now, due to the holiday, I'm looking to trade the futures and the Forex primarily. So that's not what I want to do. And kind of because I know those markets are going to move. So we can just kind of focus on those moves for those of you who are in futures and Forex, or who have, their accounts open to trade futures and Forex. So my favorite USD JPY. So we'll do a little futures tonight because we have a holiday. And you got to stay out of the market. You got to stay out of the stock market tomorrow because it's a holiday. So, wait for Tuesday, see what Tuesday brings us. We'll of course look at earnings reports, do your homework beforehand and kind of get an idea there. Do I have a move with Forex? Forex is in this order block 2 area, USD JPY. So it's kind of deciding to break out, and that's kind of what I've been waiting on is the breakout here for Forex for USD JPY. I just like USD JPY, y'all. It's just my favorite. But it's the same concept. If you like the fair value gap strategy, it's pretty easy. There's no other indicators needed. And you can just kind of do your thing with that. And so my focus between today and tomorrow is futures and Forex. And then I'll come back to the tickers, obviously on Tuesday and see what they do. But my overall sentiment is either sit on my hands this week when it comes to stocks and options or take advantage of somebody like Adobe, Lilly, any of the other companies that may just do a breakout move. Because I don't believe the futures is going to give us the because I only need 5 handles on the future, so I can do the future. But the SPX and SPY specifically, I don't think they're going to give us too much of a move because this is common. Make a W and then chop for a little bit. So depending on your trading style, right? Swing traders, I will probably sit out. Day traders, if you know how to capture the move, go for it, right? And just focus on some other asset classes to make your money if you want to. But that's all I really have for today. We've been on this call way longer than possible. I think all of us were trying to ensure that we covered a lot of bases for newbies in the crib, which I thank you guys for doing so and making things as clear as possible. But we can end this call tonight. No trading tomorrow. See you guys on Tuesday as far as live day trading and me on Zoom. But of course, we'll be chatting it up in the Telegram tomorrow to see, because Tans and I are always going to be playing the futures. So we'll keep you guys updated on those trades. But outside of that, you guys take care. I appreciate you guys for hanging out with us for as long as you did this Sunday evening. And I will see you all on Tuesday. All right. Any other questions, concerns before I hop off and close it down? Going once, going twice, jump on mic. All right, because by the time you type it, I'm gonna hang up. Going once, going twice. Nothing. Y'all good? Somebody has a wave. All right. Peace out, homies. See y'all Tuesday. Bye.